evening and welcome to the Capital Market. I'm Edidiong Iwang. The coronavirus outbreak is causing widespread concerns and economic hardship for consumers, businesses, and communities across the globe. The situation is changing quickly with widespread impact and unprecedented risk across a broad spectrum of the financial markets. But tonight, we'll turn our focus to the private equity market in Nigeria, and I'm being joined by Yomi Jembewo, co-founder and managing director of Cardinal Stone Capital Advisors. Good evening, Yomi. Thank you for joining us on the program.
Good evening, Eddie Young. Thanks for having me.
So how badly has the COVID-19 pandemic affected private equity in Nigeria, and how are private equity firms surviving the pandemic?
Thanks for that question. It's affecting us just as it's affecting everybody else. But basically, there are four categories depending on where you are as a fund manager. One, if you're fundraising, this would be a really difficult time to close your fund because your limited partners are either reassessing or holding back to see how your market, Nigeria, Africa, is impacted by this and if they still want additional exposure into the market. Two, if you're looking to deploy capital or if you're in the middle of a transaction, many of the transactions have to kind of take a pause. You want to see how the businesses are being affected by this. You want to see if there's a change to pricing, if there's a change to the viability of the business that you're talking to. And so that might cause a delay in the transaction or in some cases, kill the transaction. Third is if you've deployed already, and you have businesses that are kind of suffering from the impact. So you're working very closely with your managers and the owners of those businesses to mitigate the risks and the challenges of COVID-19. And the fourth is if you're on your way to either closing and returning capital or exiting a transaction, it would probably cause to a delay of either an exit or you would have to extend the life of your fund. In terms of how we are reacting as managers, two key things. Like, as I said, you're working closely with your portfolio companies, working with them to address their liquidity concerns, assess the viability, and work with them to strategize if any kind of pivoting is required. On the other hand, you need to basically do some stakeholder management with your LPs, your investors. Keep them abreast of what's going on. If you need any help, the sooner they know what's going on with your portfolio, the better.
So it's not bad news all around as there are some sectors that benefit from the coronavirus. So are there any benefits for private equity in a volatile market?
Well, I mean, I would hate to use the word benefit because the whole world is suffering right now, and there are a lot of challenges all across the board. However, I think if you're a manager who has not deployed a lot of your capital, you're feeling better. Why? Because a lot of businesses are going to be repriced. And once you've invested and there's devaluation in currency, for example, you've already taken a hit. So if you've not invested already, you can take a step back. Some sectors that were looking really good are going to struggle for some time. Hospitality, leisure, travel. So if you're in the middle of closing those kind of deals, you probably take a step back and reassess. However, some sectors are proven to be resilient. Healthcare right now, everybody's jumping on healthcare. Technology. However, you have to be careful. Private equity is a long-term business, so you don't want to be getting into fads. So, for example, if people are making sanitizers, the question is this a 6-month thing? Is this a 12-month thing? You don't want to be jumping on fads. So it's a good time to take a look at what sectors are resilient. Though healthcare and food, for example, are proven to be resilient, their supply chains are also challenged. So when you're looking at those businesses, you need to say, okay, there might be opportunities here, but what are some of the challenges I'm likely to face so that you have a good investment plan?
Talking about repricing, now one of the effects of the crisis on companies is a repricing of asset valuation, putting a number of assets undervalued on their own and some well discounted. From the perspective of a private equity investor, this is good news, but what about the startup or the business you're investing in?
Okay, you said startup. So first of all, as a private equity investor, we don't typically look at startups. We leave that for the our venture capital colleagues. That's their expertise. We typically look for businesses that have kind of proven their thesis. They've had a couple of years of audited financials, and then they need growth capital. That's what we do. The venture guys deal with the startup businesses. But going back to your question on repricing, it's good, but it also could be tough because yes, things need to be repriced, but it takes time for the business owners to understand and accept that. Look, think about it. If you're in the middle of closing a deal, you're in the market and we've agreed a price, and then it starts raining. All of a sudden, I say, look, the price has changed. No matter how much you agree, it takes some time for you to come to terms with it. So what's likely going to happen is people are going to take a step back. They might stop talking for a while. They might come back to the table. In a place like Nigeria, where there's been some repricing of the currency, but we anticipate possibly some more repricing. A lot of deals are going to either hold on until we have clarity on that, or unless the business owners are ready to agree to the investors' projection of a conservative new currency pricing. So although it's good news for the investor, it could also prolong the ability to close deals and even the viability of some deals in some cases.
Likely that the scope of due diligence will change going forward?
I'm not sure I would say the scope of due diligence will change, because there are a number of things that we must look at on every deal, and that doesn't change because of coronavirus. I think, however, the way we look at certain sectors and the way we look at some things that are fait accompli, something that are not up for question, people will be questioning them. So the validity of some assumptions will be assessed. I give you an example. Some people know that the cost of doing business in Nigeria is very high, office space, cost, and all that. Then there are questions right now being asked about how do you do certain businesses? Do you need so many people in the office? Do you need so much infrastructure? Now, this might be a short-term situation, but some businesses might actually adopt that long-term. So I'm not sure it's the scope of due diligence that changes. It's the scope of assessing the viability of businesses and the risk impacts, or the potential risks for certain businesses.
How much of a concern are challenges such as currency valuation, the economic slowdown in China, and low oil and commodity prices for private equity players?
For a country like Nigeria, where, number one, our currency is highly dependent on commodity prices, oil prices, it's huge. Or anything that happens to oil prices is huge, because oil, we get a lot of our national income from oil. That's how we defend our currency. If we can't defend our currency, there's likelihood that there's going to be shortage, and there's going to be a devaluation. And a lot of our funds are hard currency, usually dollar denominated. We get capital in dollars. We have to return capital in dollars. We do deals in naira, in many instances pegged to the dollar, but we have to assume certain exchange rates and certain reasonable amount of devaluation annually. So when an unexpected situation like this happens, and what's going on with the oil prices, and there's going to be a major dip in the value of the currency, there are a lot of questions. It gives a lot of questions on pricing a deal, on the viability on many deals, because many deals you earn in naira, but we're investing dollars and we're hedging for the devaluation. So in some cases, it might actually kill the viability of a deal that you were looking at. And I think finally is, in some cases, you're going in for a stake in a business, right? And you don't also want to overwhelm the ownership of that business, so you don't discourage the owners. When there's devaluation and it means your dollar is worth more, it means you're taking more of the business. So sometimes it just kills the deal.
In his article on turning the COVID-19 tragedy into an opportunity for a new Nigeria, the central bank governor, Godwin Emefiele, says one of the CBN's short-term policy priorities is to embark on a project to get banks and private equity firms to finance homegrown and sustainable healthcare services that will stop medical tourism out of Nigeria. What is your take on this?
Fantastic. We wish things like this had happened earlier. It's a welcome development. We hope it's not a short-term, medium-term, but it's a long-term initiative, and we jump on it. We're looking to make some investments in that space, and we think the ecosystem needs it dramatically.
Use for all, but then are there any concerns or worries that need to be fixed by the government before this project takes off?
No, I mean, look, there's nothing that's perfect in any market, and definitely not here. So things around regulation, things around support, things around just the infrastructure, and things that would help healthcare businesses be able to get their feet on the ground. We know even from your home in Nigeria to anything you do, you often have to take care of all your infrastructure, power, light, things like that. In a space like healthcare, unless you want to serve the top 1%, 2%, many times it's difficult to provide all that infrastructure and yet build a viable business. Investors are ready to look at those things. Investors are ready to do them. However, we need support, tax breaks and things like that. Any of that stuff helps. It further helps us, be able to make the business case to go in, especially when a lot of the help is not just needed in the top 1%, where a lot of, or the top echelon, where a lot of the private equity capital goes, but more towards the masses. And we would actually like to make more investments in those spaces. It's just that the more support we can get to make our investment cases viable, the better.
So how can private equity firms in Nigeria prepare for post-pandemic big wins?
Wow. Again, it's keep your feet on the ground. First of all, it's a good place to be if you're a manager on the ground, because today, even traveling in between borders is a problem. We're in the middle of a deal in Ghana, for example, and we're closing our due diligence is being challenging. So being on the ground is a good thing too. Having capital is a good thing. 3, not being in a hurry to close during these times, particularly if you're just meeting managers. However, let's recognize that this too shall pass. This is a bump in the road. We've seen different dips before. This is just another dip. It's a crazy big dip, but this too shall pass. And businesses will be challenged. Some will die. They will leave customers that need services, that need products. So us as private equity players, we need to be looking at those resilient sectors that people will continue to consume, people will continue to ask for, and back the managers that show that they are resilient through these times. Back them to pick up a lot of what is left unserved by the time this is over.
So a lot of companies have now realized, a lot of companies and sectors have now realized that how they used to do things now may not really, be the best due to the COVID-19. What does the future of private equity look like?
Private equity is a long-term, it's a long-term game, right? We raise capital for 10 years. We're investing for 5 years. We're working with managers and owners for 5 to 7 years in some cases. So, I don't think private equity changes due to COVID-19. And I think this is a time also where, like every other sector, there will be some separation, right? There will be, there will be good deals, there will be bad deals. And that's why stakeholder management is important. Working actively with your portfolio company, with your LPs, because it's not just about making good returns. It's about being a great custodian, being able to explain when, something beyond your control happens and what did you do about it. So I think private equity will be resilient. It will continue to do what it does. It's interesting, as soon as this happened, we've been actively engaging with our LPs. Today, I was earlier on a call with the MD of one of our companies. Yesterday, we were. In the next couple of days, we're actively engaging. This is what private equity do. We are partners. We don't just give capital and say where are our returns. So I think this is actually further confirming the validity of the private equity investment class and why we should look more to it in this market.
I think this is a good place to leave the conversation. Yomi Jemi Benwo, the co-founder and managing director at Cardinal Stone Capital Advisors. Thank you for joining us on the program.
Thank you very much for having me. Have a good one.
We'll turn our focus to Nigeria's banking sector when we return from this quick break. Stay with us. Welcome back and thanks for staying with us on the program. The Nigerian banking industry has had its fair share of the macroeconomic headwinds, which has resulted in declining margins and significant write-offs of impaired loans. While on the path to recovery, the banking industry is now faced with the coronavirus pandemic, which comes with greater uncertainties and unpredictability of events in the business environment. Well, let's talk to Tunde Mabanwoku, the Chief Financial Officer at Wema Bank, to talk more about Nigeria's banking sector. Good evening, Mr. Mabanwoku. Thank you for joining us on the program.
Good evening. Thank you for having me.
Now let's talk about non-performing loans of banks. What are banks doing to reduce that?
In the last few months, the focus on a lot of banks have been on loan review and loan recovery. So the first step has been to access and review the quality of the loan book, put in a lot more people in the recovery function, and then work with customers to term out the loans or restructure the loans where possible. The best way is really first and foremost empathy, to work with the customers to understand what is wrong, and then slowly and gradually restructure the loans for better performance.
So with loan books currently challenged, what are your strategies for recovery?
For Wema Bank specifically, what we did at the beginning of the year or towards February, March was to firstly strengthen the remedial assets function and strengthen the loan review with a lot more technology, a lot more automation. So what we call relationship managers at the tip of their fingers can know if a loan is about to go bad. They have early warning signals that can help them track or monitor and measure the performance of loans. And then following that is now slightly more aggressive recovery. So quickly go to the customers, quickly work with them, quickly identify what the issues are, and try to find a way to resolve it. And we've seen some improvements. We've seen better liquidity from the loan book.
More banks are likely to go for Tier 2 capital raising due to COVID-19. Are you considering that as well?
What we did for Wema Bank a couple of years ago when we started the transformation was to focus on four things. Number one was people. Number two, improve the performance. Number three, work on perception. And then four, build the best digital platform. In terms of capital, we raised Tier 2 capital 2 years ago. So in the books of Wema Bank, we have around 24 or 25 billion worth of Tier 2 capital. So in the immediate, we are not considering raising additional Tier 2 capital. But in the next 12 to 24 months, we will be looking at additional equity or shoring up the Tier 1 capital of the bank.
Wema Bank reported a 40.83% increase in profit before tax in 2019. What drove the earnings and what are the bank's projections for the year?
The earnings came in largely from our strength in the retail banking segment. We focused a lot on retail and SMEs in 2019. Like I said, building first on the digital platform, making sure that it was reliable and performance there was 99.9%. So by getting more stability on the digital platforms, we got a lot more customers in, and that translated to the growth in PBT. For 2020, quarter one was quite good. We saw improved performance, improved gross earnings, deposits up. Quarter two, obviously, given the impact of COVID, we expect things to slow down a little. But our projections is year on year, you will see improved performance. However, we think the profit numbers will be slightly higher than 2019 profit numbers. And for Wema, we paid dividends the second time this year. This is the bank that did not pay dividend for 14 years. So year on year now we pay dividend. So we think this year too will continue on that track.
Well, government securities will be a major precursor for earnings in 2020, given their aggressive borrowing plans. How positioned are banks for this?
Government securities is a delicate one. And the reason being, banks have to balance the LDR, loan to deposit requirements set up by the central bank, and also balance liquidity requirements. So today, you have to have a liquidity ratio of at least 30% and a loan to deposit ratio of 65 and slowly inching to 70%. You still have to have your CRR of around 25%. So yes, government securities might be attractive as the rates inch up, but banks would largely play a cautious game in investing in government securities because the push by the industry is to do a lot more lending. But what government securities will most likely do is to use that to signal the direction of interest rates. So if interest rates are high on government securities, we might start seeing that flow to the corporate sector.
Well, there are a lot of uncertainties, and so it's not as easy to give accurate forecasts. But what is your outlook for the banking sector for the rest of the year at large?
I believe we will see a slight uptick in the NPLs as COVID impact will probably still be here for the better part of the year. So across the industry, you might see a slight uptick in NPLs. Across industry, you might see a tightening of net interest margins as customers appeal and push down the pricing of the loan book. In the industry, you see a lot more performance on the electronic banking channels. Our customers are being forced to migrate to e-platforms. So year on year, it will be a slower year than 2019, but I think the industry will pull through and have earnings almost equal to last year.
Tunde Mabawaku, the Chief Financial Officer at Wema Bank, thank you for joining us on the program.
Thank you very much.
Shareholders of Central Securities Clearing System have approved an 86 kobo per share dividend payout to shareholders. Given the approval of the dividend proposed by the board, CSCS will be paying a total of 4.3 billion naira to its shareholders, indicating a 22.8% year-on-year growth in return to shareholders when compared to 3.5 billion naira dividend paid the previous year. The clearinghouse also reported a 165% growth in non-core earnings, while revenue and profit before tax stood at 9.1 billion naira and 6.3 billion naira respectively. Frontline industrial giant Dangote Cement has released its first quarter earnings for the period ended March 31st, 2020. According to the latest financial statement sent to the Nigerian Stock Exchange, the cement maker's revenue grew by 3.8% to 249.18 billion naira, compared to 240.15 billion naira posted in the first quarter of 2019. At the same time, the company's gross profit rose by 3% to 144.85 billion naira. Pre-tax profit was higher by 11.5%, while its net profit was up by 0.6% at 60.59 billion naira within the first quarter of this year. Meanwhile, the company's board says it has obtained approval from the Securities and Exchange Commission for its planned share buyback program. But still staying with the industrial giants, Boa Cement has also reported stronger performance in its full-year financial results for the period ended December 31st, 2019. In its latest earnings report, the cement maker posted 47.5% increase in its group revenue, which stood at 175.51 billion naira against 119.01 billion naira in December 2018. Similarly, the group's pre-tax profit jumped by 69.1% to 66.23 billion naira. Net assets soared by 17.8% to 363.69 billion naira, while its earnings before interest, taxes, depreciation, and amortization surged by 66.7% to 81.98 billion naira within the comparative period. The Debt Management Office says it has issued its offering of 150 billion naira 7-year sovereign Ijara Sukuk with a rental rate of 11.20%. According to the DMO, benefits for subscription of the Islamic bond include portfolio diversification for ethical and regular investors, regular cash flow as rental income will be paid half yearly to Sukuk holders, as well as rental income which is tax-free and risk-free. The security also offers opportunity for portfolio diversification and is acceptable as collateral for borrowing from banks and other financial institutions. The book building for the Sukuk opens and closes on June the 2nd, while the settlement date for the bond is June the 9th, 2020. Still staying with the DMO, the debt office successfully raised 424.5 billion naira at federal government's bond auction, which held on Wednesday, with an offering of 60 billion naira across 3 tenors. Swap rates also closed higher compared to the previous auction at 9.2% for the April 2023 instrument, while the March 2035 security was pegged at 11.7% and the March 2050 bond settled at 12.6%. Pension fund administrators had a field day with total bid of 189.2 billion naira as allotment stood at 160 billion naira. In all, the DMO allotted 296.2 billion naira after the successful outing. Well, that's all on the program tonight. Thank you for watching. I'm Edidion Iwang. Do remember to stay safe.